appreciate our partnership and collaboration. Hi, everyone. If you want to know how two successful Chicago entrepreneurs raised over $9 million in financing, then you're in the right place. My name is Hannah Fernandez, and I'm the chapter chair of SCORE Chicago. SCORE has been around as a resource partner of the SBA since 1964, providing free and confidential business mentoring for business owners across the country. So whether you are a new entrepreneur or you've been in business for a long time, our SCORE mentors could help you start, grow, and scale your businesses. And to schedule an appointment with our mentors, go to our website at chicago.score.org. Now, I'd like to introduce our speakers. Tiesta Tea founders Dan Klein and Patrick Tannous started with nothing but an idea to sell tea. And fast forward 10 years, they have sold over $54 million of their products. Dan Klein is the CEO and Patrick Tannous is the president of Tiesta Tea. They are preschool best friends. And as seniors in college, they used SCORE Chicago to get started in 2010, building Tiesta Tea with the mission of creating premium tea products that taste good and do good. Since starting their business, Tiesta Tea has become the second largest loose leaf tea company in the tea industry, with over 5,000 plus points of distribution, according to Nielsen, and over $54 million in sales. The company has been recognized by Inc., Forbes, BevNet, World Tea News, Fresh Cup Magazine, Beverage Daily, ABC, Fox, Crane Chicago, and many more. Tiesta Tea has also been listed for 4 years on the Inc. 5000 list of fastest growing private companies in the United States. In 2018, Patrick was featured by Inc. magazine as a 30 under 30 rising stars, and Tiesta Tea was voted top places to work in America. Tiesta Tea has worked with or currently works with companies like Costco, Safeway Albertsons, Target, Meijer, Amazon, Walmart, Kroger, Whole Foods, and many other Fortune 500 companies. Tiesta Tea has secured 4 rounds of equity financing totaling $9.2 million. The beautiful thing is both Dan and Patrick have a strong passion for entrepreneurship, and they love helping people chase their dreams. They believe that anyone can do anything if they truly care and put the effort into it. Dan and Patrick, you're on.
All right, Tannous.
All right.
Thank you so much for the very kind words. We appreciate it. Greetings, everybody. I'm Patrick.
I'm Dan. Nice to meet you guys.
We're the co-founders of Tiesta Tea. For those of you that aren't familiar with us, we're a Chicago-based company. Dan, you want to go to the next slide real quick? We're a Chicago-based company. Dan and I have known each other since preschool. We started out as preschool best friends, grew up in a suburb of Illinois called Arlington Heights. We started our business while we were college seniors, actually. We studied abroad in our junior year of college. I was in Paris. Dan was in Italy, and we saw tea really everywhere, all over the world. It was teas like this with real fruits, herbs, and spices that we saw in Europe, and we wanted to bring those here to the U.S. Now, of course, as college kids, we did not have access to tons of capital. And so that was obviously, a big hurdle for us to start and grow our business. And today what we'll do is share with you, I'd like to consider ourselves tea experts, but we're also experts at raising capital. We've raised, as Hannah mentioned, around $9 million to date. Dan really spearheads and leads our capital raising process and has truly become an expert in that process. And we'll share with you the different ways you guys can hopefully fund your business as well. We currently today, we've got about 30 employees. Our main mission is to make loose tea understandable, accessible, affordable, and bring it into grocery stores across the United States. To date, we've sold, this year we'll do around $11 million in sales. Our facilities in Elk Grove, Illinois, and yeah, Dan can kind of explain how we finance the business and how we continue to finance the business. Every stage of your growth is going to require a different method of financing. I mean, literally the first thing we did that's probably not on this page is it was a credit card. It was a personal credit card. I put I think it was like $1,200 down and just bought a bunch of tea from just from a wholesaler, and then we bought bags like this, just really, really cheap bags in plastic cans and packed them in the cans. And that's what we did with our first $1,200. But throughout this slideshow, Dan can explain some of the other methods that we use to fund $9 million of our business. Take it away, Dan.
All right. Thank you guys for joining us today. Really appreciate it. It's an honor to be here. Honestly, never thought I would ever be doing something like this with SCORE. As Patrick mentioned, we started out basically as college students. SCORE was one of the first places we went for mentorship, or basically the first place we went, and got some great help, which was super awesome and super critical for us. Helped us build our business plan, even helped us get our first financing, which I'll talk about a little bit throughout the presentation. But it's really just an honor to be here. So we're a Chicago company. We grew up here. We've been raised here. Both went to college in Illinois. Both went to high school, grade school, preschool, all here in Illinois. So we are very proud of that. And there's a great community here and something to be very proud of. And most importantly for this particular discussion, very important for raising financing. It's a great place to be in terms of raising financing. And when I mention Chicago, it's not just the city proper. I'm talking about the whole area, the whole surrounding area, and even the Midwest is very strong in a lot of these areas. So today we'll talk about how to finance a small business. I want to break it up into all the different areas that we've seen or used in terms of financing our business. There are certainly a lot of others that I did not list here today. Patrick mentioned one that I did not put, but definitely is a way to finance small business and one that we use even today, which is credit cards. But these, the ones on this.
It's not a way to really finance a business, to help to bridge finance in a business, because the credit card, the interest on a credit card is just so expensive. But yeah, that's sorry, I wanted to add that.
Yeah. I'll definitely touch on that because surprisingly, credit cards actually in some cases can be less expensive than some of these other areas. So, but of course, credit score is very important and all that. So, but yes, as Patrick mentioned, we started out just with a credit card. It was one of his personal credit cards. Wasn't even a business credit card. Started out there with, I think, a couple thousand just to start. And, we were super fortunate to get a grant, which I'll talk about. These are really the areas that we have some experience with. So grants, private loans, AR financing, so accounts receivable financing. So basically producing an order and then getting financing based on that. The term that sometimes is used in the industry is called factoring, which you'll hear about later in the presentation. There's also asset-based loans, and those are typically based on inventory and then also on those invoices or accounts receivables that you may have in your business. There's traditional bank term loans, which we'll talk about. There's crowdfunding, which has definitely expanded quite a bit over the past couple of years. And there's different kinds of crowdfunding. There's equity crowdfunding, there's debt crowdfunding, and there's crowdfunding that has nothing to do with either. So lots going on in that space right now. There's convertible note financing, there's equity financing, and then IPO financing, or going on one of the stock exchanges, whether it's here in the United States or possibly somewhere overseas or even Canada. So we'll touch base on the specifics for each and tell you guys what we did what we're about to share, and I think this was highlighted at the very beginning, and I appreciate that being said. What we're about to share today is purely opinion and experience, and it solely relies on our experiences exploring each of these instruments. By no means will you necessarily have that same experience, and you may have a different opinion than we do. Patrick and I we're very honest people, very straightforward, very Midwest. One of the things that I wanted to make sure we did today was just tell it like we saw it, even if it's not necessarily by the book or an opinion that everybody shares. Please do not rely on details in this presentation as actual facts. I did my best to fact check everything I put in there, but ultimately I'm not a financial expert. So you have to take some of this with a grain of salt, but do know that we do have experience in these areas and have learned quite a bit over the last 12 years. And it's really just meant to be guidance. All we want to do is help guide you in the right direction. We're available for questions. We'll do a Q&A at the end. And we're there for you guys. We've been through it. We still work on financing for our business every single day. I've been working on it today. Patrick has also. So it's kind of a constant thing. And definitely, if there's one tip to move on from, to remember, please consult other trusted advisors and lawyers. Doesn't need to be anything crazy depending on what you're doing. But before you engage in any type of financing, it's great to get advice. And I would suggest getting that advice from multiple people. There's a lot of different financial ways to finance your business. And they all have varying degrees of risk. They have varying degrees of rates, and there's so many providers for everything out there. So do your research, learn as much as you can, rely on SCORE, rely on us. We can help you if it's something that we know very well. But hopefully you guys find this presentation meaningful, interesting, and ultimately valuable for your business venture, and hopefully to grow it to the sky and do whatever you want to do and really grow your passionate business and advance entrepreneurship all throughout the world. So yeah, it's a little bit about how we finance our business. I will touch on each of these in the individual slides for each of these different areas. So I'm going to kind of move through them pretty quick, but definitely want to make sure we do a bit of a timeline because we've been around 12 years and you have to start somewhere. So we started with the credit card, which I didn't put on here, but that's truly how we started. We paid our first bills to our suppliers with a credit card, and we couldn't really afford it. I'm sure we got hit with plenty of interest, but just started with a couple $1,000s on a credit card and really just had a vision and grew it from there.
Dan, if I may, this is the product we bought with that credit card. As you can see, so the tea was a little different, but the packaging, as you can see, it's really basic. We hand sealed these. We used an Avery label to print our logo and then the name of the product on the top. After we got financing, it slightly evolved a little bit into something like this, which was more custom, and then even so to get something like this, which is even nicer. But this is really where we started on that credit card. You can't, you can buy custom or stock products that you don't need large minimums for, and if the product works, then you can evolve to the next phase.
Exactly. Yeah. And as Patrick just showed you, we started with very plain packaging, didn't look good, printed Avery labels and grew from there. We started with whatever we could. And at that time, we didn't really have money for packaging. So used a credit card to buy the tea, buy a little bit of packaging, very generic packaging, and then print Avery labels. I probably printed those at our house or something like that, or maybe at the library at U of I. So yeah, we were very fortunate to start out with the university grant. And again, I'll go into detail on all this in the future slides, $30,000 from that grant. We then moved on right after that. We were very fortunate. SCORE actually helped us connect with Axion. Axion's a lender, I think nationwide lender, but they have a Chicago division that's very active. And we were able to receive a micro loan at great terms for $12,000. Never forget it. Our credit was not worthy enough to get it without a cosigner. Our dads were able to co-sign on it. You know, they said, "Hey guys, don't screw this up. I don't want to be on the hook for it." And we paid off the loan. It was like a 3-year loan, great interest rate. And that was hugely helpful for us to secure that packaging.
And Dan, correct me if I'm wrong, that loan went to buy the custom packaging, right?
That and the grant, both of those.
Yeah, so we used that loan to buy our first custom packaging so that we could really stand out from the rest, and it wouldn't have been possible without some help on the financing.
And then, from there, and a lot of these, so you can see kind of on the timeline here, there's a lot of dates that kind of mix together. Sometimes financing isn't like a linear process. Sometimes it kind of just happens in fits and spurts, and you just kind of figure out what's best at the time and get what you need to get. We got equity financing right after that. We did a small seed round with some investors we met. And then shortly after that, one of the things that we did was go to somebody that could do accounts receivable financing. So basically help finance orders that we got from retailers across the US. So starting to get into retail, started to get some major orders, didn't have the money to pay for those, and then used AR financing or factoring to get those orders out. We then moved to a more traditional bank term loan, which we had with the local bank for about I believe about 3 years. And then shortly after that, moved to an asset-based loan. So a loan that's based on the orders that we send or the accounts receivable, and then also the inventory that we have in our facility. And we still, to this day, use that facility financing currently. So it's really important for us right now. We also did quite a bit of convertible note financing and equity financing. So for those of you who aren't aware of what convertible notes are, it's basically a loan that can turn into equity or ownership into the business. So it's really important. I'll talk a lot about that because that was a huge key for us and something that we were very successful with. And then we did basically 4 rounds of equity financing, and we're actually finishing the last one right now. And they're all very different. We did our first one in 2011, and we kicked off our last one in 2020. And we're sitting here in 2022, and that one's not even finished yet. So lots to share there. I want to make sure that we have enough time to spend on that because I know that that's a really key piece and something that I'm sure a lot of you are considering or thinking about or have heard about. So,
and before you move on, can you explain the word facilities, what that means?
Yeah, so if I use the word facility, it's just basically like a way to finance. Like it's an option. It's an option to finance your business of some sort. So it's a term you might hear in the finance world. And it's basically just a way to finance a loan. It could be a grant. It could be equity. It could be a convertible note. Those are all called facilities or instruments. There's a lot of crazy words in finance. And I was a finance major and graduated, and I knew none of this. So don't feel bad or have any doubt in yourself if you don't understand some of these terms, because I did not either. I had no clue, and just kind of picked it up along the way. So, anytime you're considering any financing, just make sure you understand. If somebody's just pestering you with different words, don't be afraid to ask questions. Because Patrick and I certainly did, because we didn't know any of these. We didn't understand contracts. I don't think I had ever reviewed a contract in my life. before we started the business. So there's definitely a learning curve, but there's a lot of people out there, especially SCORE and the SBA, that can really help you out. So as Patrick mentioned, one of the first after the credit card, in 2010, we were at the University of Illinois. We got accepted into a program called Illinois Launch. It's now called iVenture, and it was the first year of the program. So they required you to have a video and do a whole application. And Patrick, if you don't mind sharing that story of how we got to that application, I think a lot of people would enjoy it for sure.
The one where I didn't answer any of your emails?
Yeah, that one.
So,
That one.
I was a little scared, to be honest. I had to make the decision of whether or not to commit to doing this business with Dan or not. And it's a pretty big commitment. You never want to go half-ass on something. Like, truly, like, if you're going to do your business, you got to go all in. And so I was a little nervous. I didn't think I had the credentials. I didn't think we'd be able to get money. And so there was a competition during the summer at the University of Illinois. You didn't even have to be a student. It was open to anyone. There were people from out of state, different school, people with, getting their PhDs in the competition. But basically, it was a business plan competition to do a 3-month kind of like see what you can do in 3 months, and whoever does the best in 3 months would get this grant money. Well, sure enough, Dan had found out about this competition, and he had really, tried to get a hold of me so we could apply for it. And I kind of got cold feet. I didn't really want to do it. And so I was super nervous. I didn't respond to him for a few days. And then finally he sent me a message on text, and he's like, listen, we got this opportunity. If we win this competition, we can get 30 grand. I need to know if you're in or you're out. And I kind of had to make the decision there, and dangling that 30 grand, being able to finance our business, that's life-changing opportunity. So I took the summer, we did it. I responded to him. I said, all right, fine, let's go. We did the competition. And this is what's crazy. I think, a lot of people might look at these business plan competitions and think, how in the hell am I ever going to win that? We were selling tea, for God's sakes. Literally, we're selling tea. There were so many people in the competition that were trying to do tech projects in the next Groupon or the next Facebook or the next Twitter. And quite frankly speaking, 30,000 is not going to really get you much if you're trying to start a tech company like that. You're going to need a whole lot more. So at the end of the competition, Dan and I ended up winning the competition. I was shocked. And the reason why was because we were the only ones after the competition that had more than $1 in sales. Everybody else just had an idea. And so they realized that when the competition ended, they're like, all right, if we give these guys 30,000, they're going to be able to go right away and start selling products. And so we won the competition. We got 30,000, and we started knocking on doors and just selling as much tea as possible. But I guess the moral of that story was we didn't have to have the coolest idea or the most novel IP to win this competition. And these competitions are all over the place. And we didn't even have to be students. I wasn't a student at U of I, and we still got this money. And I mean, the minute you get money from the university, it kind of changes the game. But there's grant money out there all over the place. You just got to look for it, and maybe you can win some the way we did.
You definitely can. There's no doubt about it. As Patrick mentioned, there are so many different grants out there. Some are just general grants. Some are focused on minorities. Some are focused on female. Some are focused on different geographic areas. There are so many of them. So seek them out. There's websites. SCORE, I'm sure, has lists and lists of different grants you can apply for. Best part about a grant is you don't need to pay it back. It's literally free money. So it's the best kind of money that you can get. And, in terms of negatives, there's almost no negative. They do tend to be a bit smaller. So it's not, I would say it's like a good first step for funding. If you're looking to fund your business in a very big way, a grant might not be able to do everything for you, but it's a great first step. So yeah, as Patrick mentioned, worked with the U of I, pitched them for 30,000. We actually had to submit what we wanted to buy with that 30,000. And so the picture on the right is the tin that we actually still sell this product today. So we asked U of I, said, hey, we want to spend all 30,000 on this. They were a little hesitant at first, but they let us do it, and we won the grant, and never looked back. So we're very thankful for that grant. Another way that you can get capital, and I would say definitely a common second step would be like some kind of private loan. The good thing is these can come from anywhere, everywhere, whoever, whenever. It could be private lenders, it could be angel investors. Angel investors are typically people that have high net worths, that invest in companies, private companies, to gain returns. And then of course, friends and family. One thing that you have to be careful of with any kind of private loan is there's no like specific structure. So a private loan could be anything. You could sign a piece of paper with somebody that says, hey, you have to pay me 3 times my money in a week. You would never do that, but there's no like governing body that governs private loans. So definitely something to be careful about. Make sure you understand what you're signing. We did get a little bit from friends and family. Basically just begged our dads to put in a little bit. We're Patrick and I are both from middle class backgrounds, so there was a pretty strict limit to what that would be. I think they saw the grant from U of I and said, okay, we're willing to chip in a little bit. Actually, U of I, they asked us, they said, hey, do you have friends and family that could kind of chip in on top of the grant? And once we talked to our dads, they were willing to kind of match it, which was pretty key. It was huge for us, and something that I know we'll never forget, and something we're truly appreciative for. So when you do use friends and family, things could get complicated if they can't afford losing the money. So a lot of entrepreneurs say the number one rule that you have to keep in the back of your head, if you get an investment from friends or family, make sure that they understand that there is a risk that they could lose all the money. And you don't have to say it like that, and I wouldn't suggest that, but you can kind of feel it out a little bit. Like if it's somebody that, they're taking half their bank account and they're investing it in you, I would not personally take that investment. It needs to be somebody that has the ability to lose it. If they lose it, they're okay. They might, not be thrilled, but at least it's not affecting their lifestyle. If you do get a private loan from an angel investor, some might ask for a high interest rate. One of our first private loans was like $10,000 loan from a private investor, and the interest rate is pretty high. So it is pretty common to see some of those higher interest rates, but sometimes, especially if it's friends or family, you might be able to structure it where there is much less interest rate, or like you could say, okay, I'm going to set the interest rate kind of at the market, meaning like, you'll set it to whatever, like whatever the average growth is in the stock market, or 5%, 10%, something like that. So there are documents out there, I believe they're called SAFE documents, and not only for private loans, but also for like seed equity investments. There's templates out there that entrepreneurs and angel investors use, and they're standardized. So they kind of just started when we started the company, I think. Now they're a lot more commonplace. So you'll hear this acronym SAFE a lot. And from what I understand, they're free to download. And so you just like put in your information, you put in the investor's information, and they're considered fair, which I think is really key. So definitely check that out if you get a chance. So shortly after that, we started getting some big orders from retailers. And I'm not even sure how we stumbled upon these guys. I think we were exhibiting at a trade show, and some guy walked up and said, hey, do you guys need financing for orders? We're like, yeah, we definitely need some financing for orders. And so we started talking to them a little bit, and they said, hey, we're a factoring company. and at the time, Patrick and I were like, factoring, like, like I'm thinking factoring, like math, right? And apparently that is a term in the financial industry. And basically what it is they will finance an order that you get. And usually it's like an order that's a bit more sizable. So like, let's say your business is doing like 20,000 in sales a year, maybe like 2,000 a month, and you get an order for $2,000 from somebody, or like you have $2,000 in orders, which is beyond what you normally do. There's companies out there that will finance those orders for you. So basically you show them all the order information. In a lot of cases, you even show them like the emails. So we would send them like the email from the buyer saying, hey, we want 500 Tiesta Tea tins. We want, 10 tea accessories, et cetera, et cetera. And then what they'll do is once the order ships, they'll give you, on average, I think it's 80% of what the order amount is. So if it's a $2,000 order, they'll give you $1,600, and you have that money right away. So it's nice because if you have to pay for your materials, you could pay your suppliers right away, get that taken care of. And then once the order is paid, they pay the order to the factoring company. So they pay the invoice not to you, but to the factoring company. And then the factoring company gives you like 16% of what the total amount is. So they basically, and this is very general terms, but they typically look to keep like 3 to 4% in a lot of these situations. So they might charge like a 1% fee, and then a couple percent. And then once the order's paid, they give you the other 16%. Honestly, like factoring gets a bad name. There's a lot of people out there that do it, and we used it for years and years and years. It is a really interesting way to grow your business, especially if you have a product, because you could pay your suppliers with that money that you get from when you ship out that order. So the negatives are that it tends to be expensive money. So the rates are high. If you average them out over the course of like a year, it's like over 30% APR. If your customer doesn't pay on time, the interest kind of builds. So, instead of paying the factoring company 4% for that order, you might pay them 5% or something like that. If the customer doesn't pay you the full amount, the lender might have issues or concerns about that. And they're easily addressable, but just something to be aware of. There are also banks and lower cost lenders that do this type of financing, but at a larger scale. So like banks can do it too, but you have to be kind of at a certain size or profitability for a bank to want to do it with you. But there's a lot of private people that do it. The one that we used was like a mom and pop shop. It was 2 people. It's like 2 guys. It was like basically like Patrick and I, plus 50 years. And this is all they did. And it's a great business for them. It's a great business for you. And it's really just a stepping stone. It's not something that you want to use consistently when it comes to traditional factoring. So they might check your inventory. They might want to go to your warehouse. Those are all fine. Nothing really to worry about there. So the next one is something, as I mentioned, that we use currently. So this is, you'll hear it referenced as an ABL, but really what it is it's an asset-based loan. So asset being inventory, receivables or invoices, whatever you want to call those orders. And the loan amount is based on those things or some combination of that. So you might hear the word revolver or revolving line of credit, and typically this is what it is. So it revolves, it changes, the amount that you can borrow changes based on how much inventory you have, how many invoices you have, what that amount is, and then there's a calculation based on that. And the best part about it is it grows as you grow. So interest rates tend to be much, much lower than traditional factoring. It also rewards if you build up your inventory. So like let's say you're bringing in a big order and the inventory comes in, but you haven't shipped it out yet, that buildup you can lend on. You can lend on for ours, like we get lending for half of the inventory, so 50%. So it kind of helps you pay those bills before you ship it out and then get paid by your customers, which is great. And I would say most major lenders offer something like this. They're easy to find, and they also can be really great long-term relationships. Not always, but they can be. And they're used very frequently. So it's a good way to finance a business. It might not be something available at a very early stage, but you never know. Like if you have the right situation and you're talking to the right person, they might be interested in it. So one thing that just to be aware of is in these agreements, there's something called covenants. So these are things that basically requirements that you have to abide by to keep your loan. These covenants can be restrictive or they can be very lenient. And we've done deals where they've been very strict, and then we've done deals that they've been a little bit more lenient. So one thing, you know, especially when you get to this stage of financing, I would highly recommend having somebody look at it that has experience with this, because those restrictions or covenants, a lot of times the way that they're structured, if you don't abide by them, the lender has the ability to say, hey, I want all my money back. And I made sure to mention this in here. We have defaulted on an asset-based loan before. Nobody wants to come take all your inventory. It's a big pain in the butt for them. They don't want to own your business. They don't want to do anything like that. Most of the time, if they're good people, they'll work with you. And ultimately what you can do in that situation is add to the agreement, like add some kind of stipulation or just have conversations with them and usually kind of work it out. So just make sure you understand those clearly. Lenders sometimes are known for being really crafty on how they word those. So, and trust me, it goes beyond a level of understanding that like the average person would know, including me. So it's just something to be aware of as you get through these. So we've used 2 asset-based loans in the past. Right now we're working on our 3rd. We're moving to a new lender that we feel could be better positioned for growth. So you do kind of go through them sometimes. I mean, I think both lenders that we've used and the one we're currently with, I think the average relationship we've had with them is about 2 years. So it is common to move on to another one. And sometimes their situation changes. You know, in some cases, the CEO might leave and a new CEO comes in and they can't change your agreement. Your agreement is a signed agreement, but what they might be able to change is your future agreement. So, you know, lenders are, you know, just like you guys and all of us, they're businesses. So, you know, they may change their strategy or they may want to be less risky or more risky, depending on what's going on in the market or what their situation is or your situation is. So just be smart as you're going through that process.
Dan, couple questions I've got in the chat, if you don't mind. So for the asset-based loans, what tracking systems do we have in place to track everything?
Oh man, honestly speaking, not much. I've done a lot of the tracking. Typically you'll work with like an account manager. So you'll sign the loan and they'll be like, okay, every month I need you to send me your financial statements. And so when they're all wrapped up, you send them to them and the account manager they're there to help you, you know, so they'll kind of guide you along and you know, be like, hey, you know, every month I need these financial statements. Over time, we did, we definitely kept a closer eye on like some of the covenants that weren't just like, hey, provide me with the financial statements every month, because that's relatively easy to do. But some covenants or requirements might be a little bit more specific, and so we even today we don't have a great system for tracking them, but I'm sure there are companies out there or mentors out there that you could work with that can help you create a process for that, so that like maybe like on the first day of every month, like you check all your numbers and you say, okay, like, did it meet this requirement? Yes. Did it meet this requirement? Yes. Did it meet this requirement? Yes. And the more that you're on top of it, if you don't meet one of the requirements and you kind of get ahead of it, the lender's going to generally give you a lot more leniency, versus if they have to ask you, then, which in our case they did, it just isn't as favorable for you, and it kind of looks like you're stumbling a little bit. So shoot me another one, Patrick. Any other ones on the asset-based loan? I think you're on mute.
Where would somebody find a factoring lender?
Oh man.
And grants as well. We're getting questions on how do you find grants and factoring lenders?
If you currently work with a SCORE advisor, that I would think that's got to be your best place to find grants in the area. I think there's a couple websites.
What do you mean by that?
Like there's resource. So I'm not positive about this, but resources like the SBA and SCORE might have like a list of different grants that are available in Chicago, and they all have different stipulations. So like one might be just minority, one might be just women, one might be just businesses under $10,000 in sales, one might be university based. And then there's also websites. There's a website out there, I don't know the name of it, meant to look it up before this, that has like, you could type in like all your stuff and they'll be like, okay, here are the grants that you're eligible for. There's literally thousands and thousands of them. So, all right. And I'll try and answer some of the other questions in the Q&A also. I know I just want to keep moving because there's some good stuff at the end here. So another way to finance your business is a traditional bank term loan. So this is basically just like a bank saying, hey, I'm going to give you $500,000. And usually how they're structured is you just pay the interest. And then at the end of the loan, let's say it's like a year loan, at the end of the loan, you have to pay it back. Or the bank has to say, okay, we're going to extend it another year. So we'll give you another year. You don't have to pay the $500,000 back. Let's say it's $500,000 loan. But then your interest keeps accruing. So you pay interest every month. They're pretty easy to understand. There can be restrictions on them. They're a little bit easier to grasp, I think. They sometimes are a little bit harder to get. If it's a large loan, I would say like anything above maybe like a 500,000, they would maybe look to have your business be profitable. So I wrote EBITDA positive. That basically means you're making money before interest and taxes. And a lot of banks look for about 6 to 12 months of that before they're willing to sign an agreement of that size. The economy is changing a little bit. As the economy goes to more like recession type economy, banks they typically lend less. So their requirement for being profitable or any covenants or things that you need to abide by, there's going to be more of them. And that's just kind of the traditional nature of how the banking system works. So we worked with a local bank that we met through networking. The guy liked us, I think, and they gave us a great loan. It was exactly $500,000. The rate was amazing. They got purchased by a much larger bank, which I'm sure you guys see in the news. That happens all the time, especially now. The second that bank got purchased, that loan wasn't as favorable to them. So they were great about it. And they said, listen, guys, like, we can't extend you this money anymore. We're going to need you to find another lender. And so what that means essentially is that you find another lender that's going to take on that debt. And there are a lot of lenders out there. There's a lot of different ways to get money when you're in these situations. So we were able to find somebody else, and then we just moved on from them.
And for everyone asking about how to find the grants and some of the factoring stuff, for the grant stuff, Hannah just posted a bunch of stuff in the chat. So you should be able to just take a look at those links. Looks like there's some funds and grants resources that you might have access to. And in regards to factoring, I would suggest Googling it. Truly, just Google factoring companies or accounts receivable financing, and you'll be able to find some of them. They're usually smaller companies, just a few people. So just wanted to share that with you guys.
Yeah. Thank you, Patrick. He's keeping an eye on the chat while I'm just kind of talking. So thank you. So the crowdfunding, this is one that's definitely a newer type of financing or a way to get money. And there was a change in the law that's really important for all you guys to know if you are considering this. So crowdfunding is basically getting a bunch of money from a lot of different people is what I would say the unofficial definition is. Pretty much any business can do it. And there was a really big change. It was sometime during when Obama was in office. They passed a law that opened up crowdfunding to anybody. So like you could go on your computer, you could type in crowdfunding, and let's see, you see a company that sells watermelon, and you're like, hey, I like watermelon. I want to invest in watermelon. You can invest like as little, in some cases, as little as $10 into this watermelon company. And it's an official investment in a private company. They can be publicly advertised, which in the past, you couldn't raise equity financing publicly. If you're a private company, you had to do it. There are a number of like SEC regulations that you couldn't like post it on Facebook. I think is like the best way to explain it. Now you can, if you do it through like the requirements of this law. I forget what the law is called. Hannah and maybe one of you guys are more familiar with the name of it, but it was a big deal. So there's a lot of companies out there that help you facilitate it. So like Kickstarter is a version of crowdfunding. So that's like, so Kickstarter is crowdfunding. There's all these different ways that you can crowdfund. The one I'm talking about is the one that's really growing. It's equity crowdfunding, where somebody gets like a really small sliver of your business. They don't have any rights. And in many of these cases, they can't even contact you, which is probably a good thing. Because in a lot of these crowdfunding things, like you might have thousands of investors, but they go into one pool. So it's not like you have 1,000 people that every person's name. It's like they just go into like this one pool of investors. And that's how it's structured. The negative, there's not really too many negatives. It does require a specific filing with the SEC that's different than normal equity. So I wrote Form C ? I forget the form name. I apologize that I don't have the exact name. I thought it was Form C. So basically, the good thing is these, like the Kickstarters of the world that do this, though they have like all the paperwork and stuff. So like, you don't have to like find a lawyer. Like they have lawyers and you pay a fee and they're like, okay, we set you all up, we file it with the government, do all that. The one thing that you just have to be aware of with something like that is they do typically, I use the word not force, but like what they say is, okay, to be successful, we want you to send it out to everybody you know. So you put it on they say, put it on your Facebook, put it on your Instagram, tell people about it, tell your friends, tell your families. So you're putting it out to a lot of people, and you're putting it out as an investment. Even if they're putting in $10, it's still an investment. And from what I've heard, or at least when it first started, they do look to have your network put in a decent amount. So I wouldn't say that they rely on that, but they expect that, that you're putting it out to your network. You don't have to really, you can keep a lot of the proprietary information out of this. So like, you don't have to share like your, all your secrets in the business, but you do have to share more information than if you were just talking to your friend, right? There's, certain things that you do have to share. So, and a lot of times you make a video and do all that, and you have a profile just like you would on Facebook. So if you have done traditional equity raises in the past, just my personal opinion, I asked around, some of our investors were a little leery for us to do this after we did traditional equity financing. So just something to be aware of if you're at that stage. If you're not, don't worry about it. But this is a really nice new method of financing. After the law was passed, we were kind of at a size where it didn't make sense for us, but I've heard a lot of businesses have success here. So there's a number of different providers out there. This might be another one that that SCORE might have some good resources on in terms of who are some crowdfunding websites to work with.
Hannah, or Hannah or Stella, can you guys just make sure that the chats are enabled so everybody could see the chat? I'm not sure if everyone's seeing what Hannah is posting in the chat.
Yeah, it looks like I'm not able to go ahead and post it to everyone, only to the panelists. If the host can go ahead and enable that, that'd be great.
I will try really hard.
I don't think you're the host.
No, I am the host.
I think so. Yeah. And Dan, I'm not sure if you're talking about the Jumpstarter Business Startups Jobs Act, because that act is the one that was passed during the Obama administration. And it outlines the steps to promote access to capital for entrepreneurs, but it also protects investors as well.
Yes, it does. Yeah, it's solid. It really is. I think it came out like kind of midway through our business, but a lot of people have been using it. So it's definitely a good method. I'm going to try and go backwards here. Just bear with me. Hold on. Yep. All right. So a couple more slides left, and then we'll go to the Q&A. The next is convertible note financing. So basically what this is it's a loan that has the option to convert to equity or shares in your company. So angel investors, high net worth individuals that invest in private companies, a lot of them love this. And one of the reasons why they love it is it's typically structured as something where they have the option for it to convert to shares into your business, or they have the option to get paid back. A lot of times they do just want to convert to equity. Every convertible note we've done, everybody's converted to equity, thankfully, which is great. The paperwork's super easy. There's templates online. I'm sure you can get a template from SCORE also. There might even be that SAFE template I was talking about. And I'm sure they have something for a convertible note. They're pretty short agreements. They do typically include an equity discount. So if they do convert to shares in your company, they get to buy it on sale, basically. And typically that discounts, like ours have been like 15 to 20%, which I think is around standard. I've heard 25%, so I'm sure there's many out there. So just be aware of that. And the investor, most of the time, the way that they're structured, they do have the option to choose whether or not they want to get paid back when the loan is finished. So one thing that I always did is once I started getting close to the expiration, so like, let's say it expired at the end of this year, I would start kind of talking to them now. And I'd be like, hey, like, just want to let you know the loan's expiring at the end of the year. Here's where we're at. If you're interested, you'll be able to convert to equity and just kind of gauge whether or not they're interested in it. Just so if they're not, then you have a little bit of time to figure it out. If you need to find capital from somewhere else to pay off their loan, it just gives you a little bit of I would say, a grace period for you. So yeah, they're great. I mean, they're common. A lot of businesses do them. You can raise as much or as little as you want with them. Investors like them, companies like them. I would say this is a really good method to raise financing. And it's simple. It is relatively simple, which is nice. And it's not through a bank. It's just like private people, private firms. So you can there's a million people out there that love to do these. There's, as I mentioned, like paperwork and stuff, there's templates out there, but at a certain stage, you definitely want to have a lawyer take a look at it. Just make sure that you understand what that lawyer's charging, because sometimes it can be expensive if you don't talk about that up front. So, and then last but not least, or second to last, equity financing. So this is when Hannah and Patrick talk about 9 million in financing, we've done over 9 million in equity financing. So meaning we've sold shares of our business and received over $9 million in exchange for those shares. So the best part about these is you don't have to pay back any loans. They definitely lend credibility to your company. They're very common. There's tons of investors and firms and all these different things that just focus on equity deals. So there's a lot of opportunity there. And dollar amounts can range from you could do equity deals for less than hundreds of thousands. I put hundreds of thousands. It could be 25,000 even. And really importantly, a lot of these people or firms that do something like this, they'll re-up. And what I mean by that is they'll put in more money later. They don't always, not every investor that we've had does, but there are certain ones that will, and they might even do that multiple times. So if you raise more equity later at a higher price, some people they'll be like, yeah, I want to put in more, which is cool. So it's a great way to raise capital, especially really big capital. The number one negative by far is that you're giving away a piece of your baby. So you're giving somebody a share in your company. A lot of times equity investors, they do this a lot. They're understanding. Some of them are hands-on, some of them are hands-off, but generally speaking, as long as you follow the requirements of your deal, and the requirements are generally way less than like a debt deal or some kind of loan, you're fine, right? You communicate with them. For our equity investors, I send a quarterly update. So it's like a slide deck just like this. And I say, here's our sales, here's our marketing, here's our finance, here are our financial statements. And generally I don't even get more than like one or two questions. So it's pretty easy to do and manage. Many equity investors are awesome, like I mentioned. Some are not. Again, be careful. You're giving a piece of your baby to somebody. It doesn't necessarily need to be somebody that you've met in person, but you definitely want to have a good gut feel with them. I won't share these stories because it'll take forever, but we have had bad investors, and I just want to be honest about that. And the good thing about that situation is there's always a solution, right? And so in the solution where we have had a bad investor, we've just bought them out. So we found another person basically to take their shares and pay for their shares, and they pay the bad investor the shares, and then that person goes away, and hopefully you never talk to them again, because that's shitty of them to do that. It's just, there's no reason why anyone should ever do that to an entrepreneur, just my opinion, but as long as you're doing things the right way. So Lots of good stories there. And I'm sure you'll hear a lot from a lot of people. Be passionate, be driven. If you are looking for equity financing, they do a lot of times, they're doing it because of the founders. So a lot of times we got equity money and they said, hey, financials, are this, your investment presentation says this, but I believe in you. And that's something that you always got to keep in mind. Like at the end of the day, they're betting on you to be successful. So don't stress about that, but just know that, hey, put your best self out there, be confident, even be like confident out of your comfort zone. Like I'm not traditionally a very confident person, I would say. But I kind of turn on like a different switch when I'm talking to somebody about equity. Like I have to be a little bit more assertive, I guess. So just something to think about with how you handle your personality during these conversations. So have good counsel, have good advisors, have a lawyer look at any of this stuff, I would say for sure. And then last but not least,
real quick, go back. I believe this is one of the most important ones right here. Obviously we got 9 million from this method in totality. Dan, while I'm talking, can you see if you can enable the chat? We're still having issues with that too. But so basically the two things I wanted to address on the equity financing, someone asked in the chat, is this like Shark Tank? Absolutely. In Shark Tank, generally what you'll see is someone will say, I'm willing to give you 10% of my company for, $100,000. And so that's where the equity financing comes in. Two important things for the equity financing. First, how do you find them? I would suggest if you're raising equity money, if you're looking to sell a piece of your business for capital, go to as many networking events as you can. Literally, if you're not doing 2 to 3 networking events a week, you're getting passed up. So network. The second is there's something called angel groups. Angel groups are large groups. There's Hyde Park Angels, there's Notre Dame Angels, there's Illinois Angels, there's all sorts of angel groups. If you just Google angel groups in Illinois, you'll see a bunch of angel groups. And usually what angel groups will do is they'll allow you to present once or twice a month. They'll do presentations where they get their entire group of high net worth individuals and they bring 3 to 5 entrepreneurs to present to them for an equity investment. So networking, go as hard as you can. One of the first people we got when we were networking, we got the CFO of Eli's Cheesecake to invest in our company. His name's Joe Nogle. He's a great mentor of ours and a great friend as well. The minute we got him to invest, we met him at a networking event just out of the blue. The minute we got him to invest, we started going up to other people and say, hey, listen, Joe Nogle just put some money in. He's the CFO of Eli's Cheesecake. And people saw that and they're like, all right, this is probably, if Joe knows what he's doing, this could be a good opportunity. And that simply came from going to a networking event. So highly, highly recommend you do those if you're raising equity. Sorry, Dan. Thanks.
No worries. For whatever reason, I can't figure out this.
Okay.
This chat, but I'll do is I'll revert to the chat screen right after this. I just don't know how to share both at the same time, unfortunately. Sorry, guys. But the last one is really like pie in the sky. If you're crushing it, doing really well, typically like tens or hundreds of millions of dollars in sales, you can do what they call an IPO, which is going into the public market, meaning somebody can just buy your stock. Like you could buy Microsoft or Google or Facebook or whatever. The pluses are obviously the fact that you could just raise unbelievable amounts of money. A lot of companies that IPO, like they raise tens and hundreds of millions pretty much instantly when it hits the public market. The negative is that you're now bound by financial reporting requirements. You're a public company. At that point, you could be scrutinized by anyone because there's a lot of information that you have to share. This is one thing I do want to mention. It is becoming more common to go to Canada. It's something that we've heard a lot and know a couple companies that have done in kind of similar sizes to us. I don't know anything about it, but apparently people are doing it right now. It's not really something for us right now. And unless you have a business that's pretty sizable, it's not something to consider, in my opinion. But someday, hopefully we got someone here that's going to be the next Google or Facebook, and maybe you will be on the public market. So it's always something to strive for, and it's something that could, when people talk about, Mark Zuckerberg and Jeff Bezos and being, some of the richest people in the world, a lot of times the richness came from this. So they might have been rich before this, then they went to the public markets, and then their shares are worth a certain amount of money. And if Amazon stock goes down 20%, Jeff Bezos, his net worth goes down 20%. So it somewhat. So yeah, lots to strive for. Hopefully we can all get there. But just something I want to mention as a way to get financing in much later stages. So I will quit the presentation just so I can get to the chat and share that. Here's our information: Dan at tiestatea.com, Patrick at tiestatea.com. Shoot us an email if you have questions, if you want clarification on anything that we don't get to in the Q&A. Please let us know. More than happy to help. Like I said, I'm not a financial expert. Patrick's not a financial expert. All we can do is just share stories and share some of our experiences, and keep it up. Business is hard, and as long as you're persistent, as long as you keep positive, I think that's one of the biggest things. Use the people around you. Don't be afraid to ask for help. Always be honest, and treat people like they need to be treated, and do your best to keep growing as a person, as a business. You have a really good chance of having success. So that's all we have in terms of the presentation. And then, we'll just turn it right to Q&A.
I want to add one thing real quick. So I just want to share one, it's really raising money in terms of at least raising equity and trying to finance your business is not easy. It's really not. And there's a couple, I don't even want to say a couple things, but Dan kind of hit on it. When we're in the weeds of our business, it's really hard to always be confident, because the negatives, what fire you just had to put out a day ago, but you've got to wear your confidence hat. You have to go into every situation. And if you don't believe this, then you probably shouldn't be raising money. But if you don't believe you're creating a good opportunity for the person that's giving you the money, then don't be doing it. Right? When we went and raised money from Joe Noble, the Eli's Cheesecake guy, he gave us the money, and I truly believed it was a great opportunity for him to make more money. And you have to put that hat on, right? It didn't just happen, but put the confidence cap on. Stop thinking about the fires you put out, and truly just, if you're not confident and they don't see the confidence in you, how are they going to give you their money? And so I know that's not an easy thing to do, but make sure you're aware of how you're feeling when you go into these situations, and try whatever you can to mentally, I got this. I can do this. I'm going to do this. This is a great opportunity for the investor, and it's a great opportunity for me. And if you go in thinking like that, you won't be as, I don't want to see scared, maybe nervous, and the confidence will breed more success. So we'll go into Q&A here. Dan, can you talk about how we started paying ourselves? Like, when did we pay ourselves? Talk about that a little bit.
Yeah, I mean, we started, I think once we could afford paying anyone, we started paying ourselves like enough to live, basically. We were young. We paid ourselves $1,500 a month.
Starting when?
And I think it was like within a year or something. It took us a little while to get there. And in the meantime, we just ran up credit cards and got some of those like seed investors, and we did, I think, probably use a little bit of like some of the loan capital to help support us in those early days, which can be common. So it took a little while, and then every like couple months we try and like go up a couple $100. So like 1,500, then it was like 1,750, then it was like 2,000, and then maybe we would do like, we'd get like a bigger financing and be like, okay, now we can pay ourselves 3,000 a month or something like that. And we always try to do as little as possible. And and most importantly, once we started having employees, we wanted to make sure that they were, that they had some pay if they were relying on us for income. So we did our best.
Patrick, you're unmuted.
Still to this day, we are not the highest paid people in our company. There are people who make more than us. And it wasn't until I'd say 5 to 7 years where we got paid what I call fair market compensation. And obviously that's a long time, but you kind of do it knowing that in the end, if you could see some light at the end of the tunnel and you get to the end of the tunnel, it's pretty nice to make market compensation when you're the owner, right? As opposed to having to go elsewhere. So thanks, Dan, for answering that. And then when doing a grant proposal or business plan, is there any things you must include when doing those? Like, what are the top 3 things you have to have when submitting for a grant?
Oh man, so the grants typically have like an application that you have to follow pretty specifically. If they offer the ability to send in a video, I would highly recommend it. That's one of the ways that we got our grant was, and ours required a video, but some do, and some say optional. It says optional, do a video. You have to, because it shows your personality. And then from there, like if it's like a really open-ended application, just make sure you touch on, how are you going to make money? What's your sales plan? Like, how are you going to generate money for the business? What kind of general idea of profit are you going to see? And then try and show like a path as to like, okay, in year 1, I want to do this. In year 2, I want to do this. Spend some time on it, get help from people. There's a million people out there. Score will help you. Advisors will help you for free. I mean, just use as many resources as possible to put together the best application you can. And don't be discouraged if you don't get it. There were a lot of grants that we applied for that we didn't get, but then there's the one that you get that changes your life. So you kind of have to have that mentality when you do them.
And you're going to get turned down 99 times, truly. Like, and it takes a lot of resilience. We just switched the line of credit to another lender for a line of credit, and I've got a COO and I've got a CEO. My Dan's our CEO, and you could tell there was a little nervousness going into, hey, are we going to get this? And Dan came out. He sent us a message on Slack. He's like, guys, we got the line of credit, and we got turned down a lot of times before we got that note. So don't let someone who tells you no discourage you as well. Dan, let's see here. How did we recover from defaulting on our loan?
Oh, God. So they'll tell you that you're in default. They send you a letter, super official looking letter that says you're in default. And the first thing they always do is they say, let's have a conversation. So we sat down with them. We're like, listen, guys, like we weren't as profitable, or we didn't make as much. Our loss was higher than we were expecting. And, we know it's not what you're expecting, but, we need a little time to figure it out. And so we worked with them, and basically they gave us an extension. And what they told us is they said, you need to find a new lender. Like we can't lend to you anymore, but we're not going to kick you to the curb, because if you guys remember, I said this earlier, it's a pain in the ass for them to collect on you. So they would much prefer getting paid off by another lender, because it's so easy, because literally the other lender just writes them a check. So, and there's a million lenders out there and a million different ways to get lending. So you just have to, you're honest, straightforward. and ask for time. Just, hey, I need some time. Make sure you ask for the amount of time that you need and build in some buffer, because things always take longer than you expect, and keep them in the loop. So I would just keep them in the loop. I'd be like, hey, we're talking to these couple lenders. We should have a term sheet from another lender in a few weeks. A couple weeks later, I'd be like, hey, we have a term sheet. We're comfortable with it. We're looking at one other lender. And then if not, we're going to move forward with these guys. So I was constantly communicating with them to make sure that they didn't think I was like blowing them off. And I think communication is the really important piece here. Don't think you're over communicating, because communication, if you're not communicating, they think you're trying to run out of Dodge, and you're not. You can't run. And you're going to find another solution, and that in your head. So just be confident in that and keep them posted on all the developments.
Awesome. And so here's a good one. Let's debunk this myth. Is the SBA as helpful to a new business as they say they are? Tell them about that one, Dan.
Oh man, that's listen, there's the SBA is there as a resource. You should not, one thing that I've always thought about in business is you can never rely on one resource. Don't ever rely on any single resource. Can the SBA help you? Yes. Is it possible that they might not be able to help you? Yes. So get multiple options. Right? Mm-hmm. Go to the SBA. We've gone to the SBA, during COVID, we went to the SBA, we got help, we got financing. Every time we've gone to the SBA, we haven't necessarily gotten what we've asked for. That's okay. That doesn't mean that the SBA is terrible or anything like that. Just know that it's one option of many out there. Don't rely on it, and do your best to just be patient. And things take time.
Dan and Patrick, I do want to add, in terms of the SBA, even the SBA themselves, they can't help you, but they too rely on resource partners like SCORE, like the Chambers of Commerce. There's also the Allies for Community Business. So that's really, really good advice to go ahead and don't rely on just one source.
Yeah. And if I could add, I would just say it's nice to have them in your corner. Right. It's nice to have the SBA on your side. They are a good resource. And at the end of the day, their goal is to help small businesses flourish. That's their goal. Yeah. And whether it was the first loan we got for $12,000 or the help we got with financing during COVID, I'm proud to say that we've got the SBA on our side. So I'll debunk the myth. The SBA is very helpful. I would urge you all to get in touch with your SBA chapters if you can. Start the relationship. The first, as I've mentioned, the first thing I did when I started working with SCORE and the SBA when I was a senior in college, and they pointed me in the right direction to incorporation and also a lawyer. So I got a free lawyer to help me out in the beginning. Then shortly after that, because they saw me take those steps, then the next step was the loan, 12 grand. And we got that. So if you've got, America and the United States is truly the most opportunistic place to start a business in the world. And I believe government agencies like the SBA are reasons for that. You won't have those opportunities in other countries. And so if you don't utilize it, it's kind of like an unforced error.
I'm gonna double down on that because I truly believe very strongly in this. Patrick and I have been fortunate enough as business owners, and selling tea is from all over the world. So we visited Asia, Africa, Europe, South America, wherever. People in those countries, business owners in those countries, are jealous of us here in the United States, and I'll tell you the number one reason why. In the United States, the way that business is set up, you can fail and then start something else and succeed. And in a lot of other countries, there's so much red tape with starting a business. Here in the United States, you could start a business today in 15 minutes. You can't do that in other countries. And honestly, like, you know, the resources are all great, but at the end of the day, like free commerce and allowing people to start businesses in 15 minutes, you can't do that anywhere. It is the land of opportunity. And don't think of it as politics or anything like that. We are truly blessed to live here, and we are truly blessed to be able to have businesses or business ideas here, because it is not like that in the vast majority of this world.
Yeah, 100%. I mean, my family came here from overseas, and I know for a fact if my dad didn't have, there's no way I'm as successful as I am without being a part of the United States of America. And that's one thing we all have in common, right? We're all here in the United States of America, and it truly is the greatest country in the world. And the SBA and the way they help promote small business is a big reason why. So yeah, I wanted to get serious on the SBA real quick. Thank you.
And it's your taxpayers' dollars, you know, we all pay into it. So why not take advantage of it?
Exactly. Everyone's paying into it. Take advantage of the resources that you have. It's there. It's free. It's yours. Just go get it. Go seek it out. At the very least, if you're on this call and you're not in touch with the SBA, you're doing yourself a disservice. You really are, because there's no downside. None.
And then Dan, what is your opinion on starting a business? So we've got about 5 minutes here. So we're just gonna take a couple more questions. If you could pop them in the chat, I'll make sure to get to them. But Dan, what's your opinion on starting a business with a little bit of your own investment money as opposed to relying on outside sources?
That's tough, because yeah, we didn't have that. But I would say, you know, make sure that you have a little bit set aside, you know, for your living expenses and all that. And honestly, if you put in your own capital, you're going to own more of your business. So it's not a bad thing. Just be mindful of how much you're putting in, and make sure you're careful with that second piece, so that you have a little bit of peace of mind that just in case things don't work out, that you're not, you know, completely broke.
And then, did family and friends urge you to quit early on? How did you handle that? Did you have to borrow from your family and friends?
Yeah, I mean, 100%. I mean, there's so many people that had no belief in what we were doing, whether they said it directly to us or not. People were laughing at us. Our friends were laughing at us. I'm sure a lot of our family members were laughing at us. They thought it was a joke. They're like, "What the hell? Like, are you kidding me?" And you know, I got a degree, and I mean, went to U of I, and like, I mean, yeah, some people say I threw it away, and now I'm the one laughing. So I mean, I say that like with, you know, in jest, but like, yeah, you got it. And friends and family, like, just, they are out there. Like, there are the right resources for that. Like, if it's the right situation, it's fine. As long as they know at the end of the day that it might not work out, that's what they need to know. As long as they know that, you're good. And as long as they can respect your boundaries, you're good. And I would say the ones that you will get the money from will. But if you're worried about it, just set those boundaries right away. Say, hey, like, this is what I'm going to do. This is how I'm going to communicate with you. And you have to separate family. Family and friends are different than family and friends investing. There needs to be like almost like a barrier, a wall that you have to kind of set up, where it's like, hey, like, my dad was one of the first investors. When I talk to him about that investment, I treat him like Paul Klein, my investor, not, hey, dad. And I address him differently in emails, on the phone, when I'm talking to him. It's just different. I treat him like an investor.
Awesome. 2 minutes left. The one thing I'll say on that is, so I got another question on when we started paying each other. We didn't really start paying each other till like a year and a half in. And at one point I couldn't pay rent for my property that I was living at. And so I, on 4 separate occasions, asked family and friends for personal money. This wasn't to pay for the business. This was to simply live. I asked $1,000 to my uncle, my cousin, and 2 of my closest friends. Those were the guys who weren't laughing. Those were the guys who really they're like, man, it's cool to see you try and do something and really use your passion. And so when I needed money to pay rent, I called them. And of course I've paid them back. One of them I bought a watch and a custom suit for, and you'll never forget those guys, those people who actually said, you know what, I don't even care if I lose it. I just want to see you keep going. And, a lot of people say your network is your net worth. And in many cases, it's true. Like, you got to, and don't be scared to ask people. No one's going to ask you, I promise. No one's going to come to you and be like, hey, you need a towel? It's not going to happen that way. But if you do it the opposite way, you might. And honestly, it's like when you put your ass on the line, that's when you start busting it. And asking your cousins and your uncles for money, it's going to make you put your ass on the line. So, Hannah, anything else? We got a minute left here.
Yeah, that's just wanted to go ahead and thank you, Dan and Patrick, for such an outstanding presentation. I really love that you guys kept it real and really shared a lot of candid insights, because for many entrepreneurs that would go to us, they'll always say that securing capital to grow their business, it can be exhilarating, right? But it's also daunting as well. So this is just a wonderful opportunity for everybody listening to learn from successful entrepreneurs like you who have been there and done that. And lastly, I love that you said people invest in people, and you really got to put yourself out there and put that confidence hat on. So thank you guys.
Thank you, Hannah.
Be confident. Thank you, Hannah. You guys are awesome. Thank you, Score. Thank you, SBA. Be confident, be confident, be confident. I cannot emphasize that enough. That is one of the core things to raising capital, getting loans, getting equity, getting grants, doing anything. Put yourself out there, be real, but be confident. Be confident, go outside your comfort zone to find that confidence, and be yourself and let it fly, and have fun doing it. You're going to stress out a little bit or a lot, and it doesn't go away, but it's okay. You're gonna persevere. You have to have that belief in yourself. You have to have that belief in the people around you, and you just have to have. It's almost a crazy belief, but don't ever forget it, and always remind yourself that there's another day. No matter what the day brings you, if it's a bad day, you might have the best day of your business's life the next day. Don't ever forget that.
Absolutely. And Thelma and Stella, I appreciate the teamwork as always. And to those of you who joined in today, remember, you're not alone. Score Chicago and the Chicago BACP, we're all here to support you. So please stay connected with us. Keep attending these webinars and really schedule your appointment with our mentors at Score. The mentoring sessions are always free and confidential and can be scheduled from our website at chicago.score.org. And back to you, Stella.
Thank you so much for today's presentation. I hope that all of our attendees got the much information they were looking for. If you are a part of the BACP Entrepreneur Certificate Program, you get credit for joining this webinar by sending an email to bacpoutreach@cityofchicago.org. Again, that's bacpoutreach@cityofchicago.org. To learn more about our upcoming webinars, please visit chicago.gov/business education. Thank you.
Bye, everyone. Great job, guys.
Bye-bye.
Bye.
Bye, guys.
Thanks, everyone.